Good afternoon, everybody, and welcome to today's webinar, where I'm delighted to be joined by Stacey Roja from IP Global and Donna Spencer from IPFG Mortgage Brokerage in Dubai. Welcome, ladies. How are you both?
Good, thanks. How are you?
Very well, thank you. How's yourself, Donna?
Good, thank you, Grant.
Really good to see you. Thanks for joining today. Well, today's webinar will be on Portugal and mortgaging in particular. And Donna's going to be providing a lot of information on the mortgaging side. Meanwhile, Stacey will be providing some great input in terms of Lisbon and Porto, COVID update, and really how the projects are faring that she's brought over the last couple of years. So if we get straight into the presentation, so let's go to the first slide. So first up, let's just give a little bit of background to the IP Global business model. Share a little bit in terms of the company and how we work as a business. Okay, here we go. So IP Global, for those of you who are not aware, is a research-driven end-to-end property investment company. We do everything from initial research and due diligence right the way through initial the introduction to lawyers, everything around mortgaging, obviously with Donna and her good work, and also lettings and management. We specialize in city centre opportunities. If you look at our key markets right now, it's UK, Germany and Portugal. Just as a bit of a heads up, we've got new opportunities planned in Birmingham and Leeds. We've got Leipzig in Germany, but of course today we're going to focus on Portugal and touch on Porto and Lisbon. From my side, I've been in the business at IP Global for 14 years now, and I've seen us transmit around about $3.2 billion US of property investment since we set up. Next slide, please. So there's a fantastic picture. Obviously, you've seen that image before, Stacey.
Yeah.
Wonderful Porto there, all these beautiful coloured buildings. So if we look at Portugal and just sort of summarise from the year, great start to the property market, lots of investment January to March. Then, of course, COVID struck. But really, Portugal handled the situation fantastically around COVID. And I know that Stacey will share a little bit more on that in a second. And then in the last few months, what we've seen is a tremendous amount of investment going into Portugal, given the way that they handled the COVID crisis. So at this point, I'm going to hand over to Stacey.
Perfect. Thanks, Grant.
Over to you.
Yeah, I mean, as Grant and I have both been to Portugal, I've been a number of times, and Grant, I think you've been once or twice as well. And you can really see the new investment going into the city in both Lisbon and Porto. And I think Portugal really showed itself in a shining light in how it handled this COVID and the pandemic situation. Nothing like this has obviously happened before. And I think what they did extremely well was react to it extremely quickly, whereas a lot of other places took a long while to actually shut their borders and actually get people to stay indoors. You know, Portugal, after its first 100 cases, they declared a national emergency. And then, you know, that was once a national emergency was declared, they'd only had 2 deaths, where I think Spain had something like 6,000 cases before they actually decided to declare a state of emergency, close the borders, and actually keep everyone inside and put on these restrictions. So one of the other the benefits that Portugal did have in reacting to the COVID-19 was the fact that it was the last country in Europe to register their first case. So they obviously learned from their neighbours. They learned how they reacted, what they did well, what they did badly. And this, I think, also really helped them in keeping down their numbers and keeping down the mortality rate. Portugal actually has, you can see bottom right there, one of the lower mortality rates, as terrible as that is to discuss, but they have 188 cases per 1 million citizens, whereas if you look at Spain, it's about 656. The UK is about 615, and France, you're about just under 500. So a lot of this, also keeping down these cases and sort of reacting so well is what Portugal's put into there and invested into their public health system over the last 5 years. They really have, I mean, they've increased the number of workers in their healthcare, and they've also added over the last, I think, 4 or 5 years, 1.6 billion with government spending to their healthcare, which has really helped to centralize the health system, and it's really helped in Portugal coming out of this COVID or keeping its position this COVID stronger than a lot of its neighbors. Obviously, with the dependence that Portugal has on tourism, it has been hit hard by the COVID. We're looking at an economic contraction of nearly 9% in 2020. But again, once everything starts opening up, the borders start opening up, companies start opening up, which they really are, they're looking to bounce back next year with a 6.4% growth, and the year following that, 5.5%. And going forward, you're looking at circa 2% growth over the next couple of years, which is where they were just before this virus and the pandemic broke out. And even though, as I said, they've taken a hit because of tourism, if you look at the real estate industry, it really has shown a lot of resilience compared to other countries. Year on year, it's still grown. I think June year on year, it's grown 12%. So, you know what, it's managed, the construction industry's managed to carry on. It was an essential service in Portugal. And they really have put in a lot of effort and put in a lot of sort of structural elements into the both economy and into this industry to keep it going and keep it strong through the pandemic and also obviously going forward.
Yeah, and it's quite amazing the effect of all that investment they put in the health service in 2015.
Yeah.
And then you see that huge difference in deaths between Spain next door and Portugal is just quite incredible, isn't it?
Yeah, so obviously when Portugal saw what was happening in Spain and France, they upped their capacity, their bed capacity in hospitals by 35%, I think it was. Yeah. And they've actually never had to use this, which is incredible.
And really the way they've dealt with COVID is why I think we've seen so much confidence returning to the country and obviously subsequent investment in the last few years.
Yes, yeah. No, for sure. I mean, they've definitely proved themselves, obviously, how hard they were hit back in 2018 with the global financial crisis. Compared to here, it's sort of chalk and cheese.
Yeah, correct. Yeah. Okay, great. So if we move on to the next slide, it's now a pleasure to bring in Donna Spencer from IPFG in Dubai. Obviously, Donna, we've all known each other for a number of years, and it's great to be working with you on Portugal mortgaging. So perhaps you want to do the formal introduction and give a little bit of background to yourself and the business.
Thanks, Grant. Yeah, of course, we've known each other so many years now. We've gone through so many different new markets, and obviously Portugal being one of them, which is exciting. Just a little bit about the company. So International Property Finance Group, we are based in, I'm based in the Middle East. However, we do have a branch in the UK, which is FCA regulated. We look at different markets, and when IP Global were looking at going into Portugal, it was something that I was happy to support. So we're looking at how the global client can then invest into Portugal, making that mortgage process as simple as possible. So we'll work side by side with the client to get them to where they need to be to get the finance in place. I personally have been in the industry for 20 years. We've got, if I put all the consultants together, there's over 60 years actually in experience of finance. So, and we've got a good, strong team around us that just basically want to do right by the client. We'll always be upfront and honest. So that, I think when you're looking at finance in a different country, I think it's really important that you've got someone that stands by your side and tells you what's going on and give good communication. So we pride ourselves on that, and hopefully we get to the end goal and make it as simple as possible. So just move on to the next slide, please.
Right, so thanks for that, Donna. Yeah, you've got a wealth of experience, as we know, and do great jobs with your clients. So I think this is really good sort of starting place for mortgaging in Portugal. So in terms of the process, there's always a set process, and you know, for clients to do this themselves would be very, very tricky. So perhaps you just want to walk through typically how the mortgage process works in Portugal.
Yeah, of course. So first things first, we don't just do buy-to-let mortgages. We do the residential if you were looking to move to Portugal So we can actually help with that as well. We have people on the ground in Portugal that speak both English and Portuguese. So just to make that the translations a lot easier when dealing with the paperwork. One of the first things I'd say you need to do is you engage the lawyer, because you will need to prepare for a fiscal number, your tax number, maybe an easier way to describe that. So I'm sure the guys at IP Global will be able to explain how to do that. You have lawyers in place. What we normally do is we ask you to fill out a fact find, because from that information, and it is quite lengthy, there is 8 pages of the fact find, but we've tried to make it as simple as possible, because you can edit the PDF on the system. So if you go in, edit and put all of your information in there and send that back to us, we can then have a real look at what's available to you. Now, clients tend to either choose a fixed rate or a variable. Variable rate would be more sort of targeted for the investor, which normally come out a little bit cheaper than the fixed rates, but we'll talk about that later. So once we've got your fact find, we can then look at the lending options available to you, and we would then send you those options. If you're happy with those, and we can discuss them, we can discuss the detail around the product. So I've dealt with a few of Grant's clients where we go through the early repayment charges, what that product does for the client, and then once they're completely happy, we'd go to pre-approval stage. That, depending on the bank, can take up to 72 hours. It's not digital like it would be for some lenders in the UK, so it's all very much paper-based. Once that pre-approval comes back, we're ready to start the application. So we would send the mortgage application and a list of documents that would be able to, or would need to be provided, and I can tell you about those on the next slide. And once we've got that information, we will check it, because what we don't want to do is we don't want to give the bank the bank statements, or if there's anything that we can't explain in there. And then once we're happy with that application, that goes over to the bank, and then they start to assess your documents. A bit like the UK, it's not too dissimilar once you get to the underwriting stage to the UK. They then would agree whether they're happy to go ahead. Usually they'll ask for more information, obviously, like most banks are at the moment. So we would request that from the client, get that back over to the bank. Once they're happy with all of that, the underwriting's taken place, then the property of the lending's agreed, and then we go to the mortgage approval. Once the mortgage has been formally approved, then the valuation takes place. That normally at the moment is taking around about, I would say, sort of 10 days to turn that around. And then the mortgage contract is issued. We'll take you through that, because we don't want you to sign anything that you're not sure of. Take you through the mortgage contract, and then you would pay our final fee. And that's really where the mortgage ends really. You would need to open a bank account. The bank account is normally opened with the lender that you've taken the loan with, and this can't be done remotely all of the time. So we would tell you up front with the lender which banks you might have to fly to Portugal with. Due to COVID, a lot of the banks have been understanding, knowing that clients can't fly in there, and they have been doing video calls with the client, which we've found really, really useful. So that has helped. So that's really the only sort of niggly part in the process, if the bank chooses that you do have to be present when signing the bank account opening. But the mortgage side is, you don't need to be there, you can do it remotely.
And then once all that's done, Donna, when you get the details of the mortgage in from the banks, is there normally sort of a few options that can be presented to the client in terms of different mortgages on offer?
We would normally do that at pre-approval stage. So, for example, your client, Grant, where we had 2 different banks with 2 different variables, and then we had further banks with 2 different fixed. Yeah. So we would show the client the option from outset, rather than not knowing the type of mortgage that they're going through, or going for, sorry, from outset. Yeah,
and then presumably you'll just talk the client through the various options as you go through the mortgage journey. Yeah.
Absolutely. As I said earlier, that the fixed rates do tend to be more aimed at the residential purchaser. and the interest and the variable products are really based or aimed at the international buyer.
Right. Okay. Right. Let's move on to the next slide. So, okay. So look at this slide. It all looks a little bit daunting with all these documents, but I'm sure you're going to simplify the process, Donna, and you know, show your value add. So just go through this one for the benefit of our viewers today.
So with the, I mentioned earlier about the fiscal number, when you engage with your lawyer, they would then start the process of you getting a tax number, and we will need this at application stage. So the lawyer will take care of that, and then you will just present that on your mortgage application. A lot of these documents, although it may look a little daunting, it's actually not that different to the UK. So your passport, so proof of identification, proof of residency. We would need to see your earnings, so your bank statements, usually the last 6 months, so where your salary is fed into. And if you keep your deposit or your savings in a different account, then we'd need to see that as well. I think what's really important when you're looking at any type of lending in any country, it's always showing that paper trail. So if you've got a bank statement and there's money coming from or coming out of that bank account and going somewhere else, where's that going and what is that doing? And I think we just need to be mindful of that, you know, we can prove where the money's coming from, we can prove where that's going to. One thing that is different in Portugal that is not normally required in other countries is the credit report. So you would need to do a credit report in the country that you live in. So if you're earning in Hong Kong, then you would show your credit report there, same as if you're based in the Middle East. So that was what you would need to provide. There are some countries that don't offer that. So you would then go back to the last country that you may have lived that does offer that. So if you were British, for example, you would offer the Experian report, which you can do that online. It's very, very simple. With the breakdown of the employed or self-employed, it would be literally 3 months pay slips. There would be a salary certificate like you would do in the UK as well, just saying who you are, that you work at the company and how long you've been there and your earnings. So it's all very simple. And if you do a tax return in your country, even though you are employed, you would need to show that as well. Self-employed, you would need to show the company's bank statements, and you would also need to show your tax returns for the company that you're, or if you're self-employed for that. So it's quite self-explanatory.
I think really the point is actually it is similar to a UK process, isn't it? It's actually, if you look at those documents, there's nothing really different apart from the tax number, which of course the lawyers will apply for. So it's you know, it's a comfortable process, obviously, given your knowledge and expertise of what the lenders require, Donna.
Yeah, I mean, as an expat or a foreign investor, we always have to jump over hurdles to get lending in a different country than where we're sat. It's not as easy as going into your local branch. So there is a stigma attached to, is it really difficult? Oh, it's, you know, it's such hard work. Actually, when you break it down, it's actually quite simple. And these documents, normally we find clients can obtain these within a week. So it's not that difficult. It just needs a little bit of dedication, and the rewards are there anyway. We know that. We've seen the rates, right, Grant? so yeah, I mean, it's very simple. Yeah,
it's well worth going through the process. I totally agree. Okay, let's move on to the next slide then. So yeah, just a continuation of just some of those remaining sort of factors and information that's required. So maybe if you just want to summarise this slide, Donna.
So just like if you have any loans, of course you need to show your latest statement. Credit cards, same thing. If you've got rent that you receive, if you've got properties elsewhere that you rent out, we'd need to see the tenancy agreement and obviously the bank statements which show that rent going into the account, so that we could, sometimes we might need to use that as part of your income. So that's why that's really important. If you've got other mortgages, we'd need to see those mortgage statements, so we can see that they're being paid on time and that they're being satisfied. So we would ask for the last 12, usually run on a 12-month statement. So we would ask for the latest mortgage statement. And then there will be certain documents that will be needed for the property that you're purchasing in Portugal. And that's where we would obviously liaise with IP Global, which can then obtain that information, and we'd submit that. So the client really wouldn't need to get into too much detail here. We would do that between the two companies.
Brilliant. Okay, that's a really good summary of the process. So now if we move on to the next slide, now we're going to actually talk specifically about some of the projects, and obviously bring Donna in terms of mortgaging, in terms of what we can expect as loan to values with the 3 opportunities that we currently have across Lisbon and Porto. So Stacey, maybe you want to start with Bella Vista. Obviously we've both been there.
Yeah.
Yeah, what are your thoughts on Bella Vista, particularly sort of given when we underwrote this, and obviously how it's all shaping up now?
Yeah, I mean, we've sort of seen the latest construction photos, and it's just so great, I think, for when we underwrite product, that when you look at the CGIs in the beginning, and obviously, you know, it's something that you're expecting to get, sometimes works out exactly like they look like, other times not so much. But this really is, the developer's done an impeccable job. The finishes are really high spec, top notch, proper wooden floors, floor to ceiling windows. And I think the thing that stands out a lot here is really the views. You've stood in the building, I've stood in the building. Yeah. You can't really actually explain it until you've stood there and looked over. It's a view of the city, so downtown Lisbon, and then you've got the River Tagus to your left, and it really is something else. It's on one of the highest hills in Lisbon, and you get this beautiful, beautiful, expansive view. And whenever anyone asks me about this product, that's sort of my go-to at first, because you don't often get that in Lisbon. You know, there's so much construction going on at the moment that you obviously, the views are sometimes blocked, or you're looking backwards into another building. So it is absolutely stunning. It's a total of 35 units in the entire block. IP Global selling about half of them, and the developer's selling the other half on the local market. He's done exceptionally well with his sales, which is always great to know that the local market are investing in a product like this. Shows obviously the type of units and the prices all stack up if the locals are buying it. And yeah, just beautifully furnished, high spec, open plan apartments, which I would personally love to live in.
Yeah, correct. Yeah, I have to agree. I mean, I remember when I went from the centre of town, Rossio, it was just a short hop, you know, walk to the site. And in sort of Hong Kong terms, I'd say it's almost like a repulse bay, sort of quite close to the city centre, amazing views down on the water. Obviously, you look down on the lovely old church in the town of Gracia. So really fantastic site. And yeah, from our side, as you know, it's sold very well. We've got a few units left here for clients who are interested. I think the point is we secured some really great pricing here. I mean, the pricing ran about sort of €550 per square foot, but in this locality, you can pay up to sort of €700 per square foot now, I believe. So
yeah, no,
really,
especially
really
with the new stuff going on, yeah. And I mean, like Grant said, well, like you said, it's a great location. You're 10 minutes up into Expo, which is a massive employment hub, 10 minutes down into Lisbon city centre, which obviously also has the employment as well as shopping. Yeah. So, you know, you're getting the perfect mix of also new and old in this neighbourhood, because it is one of Lisbon's most traditional neighbourhoods. But then you're also close enough to the city centre to enjoy all the amenities and be an easy access, but you're in a nice, quiet neighbourhood with beautiful views.
Yeah, yeah. I think you could see a lot of expatriates living here. A lot of sort of Portuguese working in the centre of Lisbon in all the various industry. In fact, Donna, I could see you living there as well. Funnily enough,
we had this conversation earlier.
So just on the mortgaging side, do you want to share a little bit of context in terms of this project completing in October? You know, what sort of loan to values could you get, and is this a building that would be mortgageable that you could get mortgaging on?
I feel very comfortable. We're talking about 65% loan to value in this market. And if we were looking at variable rates, obviously it's case by case, depending on the client's circumstances. But if you were looking at a variable rate, we've just obtained, I believe in this project, 0.9 on a variable rate, which is a phenomenal rate when you compare that to the UK or various other markets. So definitely, I feel that 65% loan to value, would be very achievable for your global client.
Yeah, I mean, when you're looking at sort of yields of 5.5% and less than 1% interest rate, I mean, that really does stack up as an investment. Yeah, quite amazing.
Absolutely.
Okay, let's move on to the next one. So this is a Carvalho. So I'm not going to steal any of your thunder. So you go ahead. I know you're chomping at the bit to talk about this one, Stacey.
Yeah, I mean, a very different, Todd, we were actually talking about this earlier, a very different case to that of Bella Vista. You know, Bella Vista is sort of out from the city centre. You're escaping into a bit of a quieter neighbourhood. This is right in the middle of it all, really. It's in Santa Catarina neighbourhood. It is a beautiful neighbourhood, and it's really where a lot of investment is going at the moment. You're on a road that has the perfect fusion of old and new. It has modern coffee shops and breakfast spots, and as I said earlier, all the Instagrammable spots of Lisbon. But it's also got your Portuguese local cafes, your pastéis de nata, bakeries. You could grab sort of a traditional Portuguese espresso and a tart. So it's right in the thick of things. But the great thing about this is that it has also this beautiful outdoor space.
Yeah.
So a lot of the units have the balconies out the front that look onto the road, and then a lot of the units at the back actually have a nice garden outdoor area. So yeah, it's again also high spec. Most developments in Portugal are great. They're similar to Germany, where they do come with a very good spec. It's only 8 units, so a very boutique scheme. Yeah, and again, I mean, we've both been there. We've both been on that road.
Yeah.
It's a really nice place to live if you like being in sort of the busyness of the city, right by high street retail, shops, restaurants, everything pretty much on your doorstep.
Yeah, every which way there's something, bars, restaurants, big employers. I think the British Embassy is not far away. I mean, if you go in that street, all the buildings are being renovated, rejuvenated. You know, there's so much vibrancy there as well. I can see you salivating about this one, Donna.
I am. So I'm looking, as you guys know, I'm looking to relocate, and Portugal is where I want to be, really. So I'm not really, although I'm from a city, I'm not really a townie. So I'd like to be a little bit out, but it's such a beautiful, look how beautiful it is. It's so pretty. But I do like the quietness, as you well know, Grant. I might be a little bit loud, but I do like quiet around me when I take time out. So yeah, I mean, this is beautiful.
Yeah. So just on this, Donna, obviously this is different to the Bella Vista. It's a conversion, it's a refurbishment, etc. Would you have any challenges getting lending on this type of building at all? And if you can get it, what would be the loan to values, etc.?
Again, Grant, I mean, we have had mortgage offers on this, and we are looking again at 65% loan to value. One thing I think needs to be clear is when you're looking at lending, we already pretty much know, a bit like when we go into Germany market, we pretty much know what we're going to be able to lend on these buildings, but it's really down to the client's circumstances, and 65% would definitely be achievable on this. One thing that clients need to be aware of is the way that the lending's worked out. So your debt to salary ratio shouldn't really be more than 50% for Portugal lending. So we can assess that for you. But yeah, we could definitely achieve 65% loan to value in here. And again, similar rates. If you were looking at fixed, you'd be looking 1.15 is the best fixed rate that we've managed to obtain. So
how many years would that be for, Donna?
10.
Wow, it's amazing.
Yeah.
You can take a client as well. You can take a client up to age 75. One thing that we might want to point out is you can't take a mortgage on interest only. It has to be on repayment, and the normal term would be 25 years. So that, I think, we need to sit with the client and look at the cash flow, how that fits with their age, and obviously how much deposit they're putting in.
Yeah.
I think probably one thing to also point out here. Obviously, Donna, you're saying up to 65% mortgage is achievable, which is great, but we also need to just be aware of what the payment structures are for these developments. In Portugal, it works very, very different to the UK. The UK, you either pay your 15 or 20% on exchange or something 6 weeks later, and then the remainder on completion. Whereas with Portugal, you actually pay stage payments during the construction. So often it works out to be about 40 to 45% during the construction, with 55 to 60% on completion. So you still can get a 65% mortgage on completion, but you would have had to still fund that 40% up front, and then it's sort of like a cash back, 5% cash back.
Understood. Yeah, I think that's a really good point to make. But yeah, as you say, you get it back on completion.
Yes, but you have to be aware that you need that 40% or 45%, whatever it may be, in equity for during the construction. And it's normally over about 12 months, so it's not 45% on signing the CPCV.
Yeah.
It is over, different construction milestones.
Yeah. Understood. Again, this is a great opportunity because obviously it's completing relatively soon in December, so it allows the client to get their money in quickly, start receiving their yield, and obviously bedding the investment down. And I think, again, for this location, I think the pricing is about €700 per square foot, but you've got Chiado, which is the waterside area, only about sort of 10 or 15 minutes of walk away, and you can pay up to sort of €1,200–1,400 per square foot, I think now. So it's a really good value spot, isn't it?
Yeah, no, for sure.
Yeah. Okay, let's move on to Literal Living, another place you probably happily reside at, Donna. This is up in Porto. I remember walking along that beach after a nice meal, and I'm grateful that you said that this could be one we were doing, Stacey. I'm so pleased I went to this site because I absolutely loved it here. Really super developer. So perhaps again you want to give an overview of this particular location.
Sure. I mean, you've been to site, I've been to site a couple of times, and when you're heading to the site or the location, you do leave the sort of central Porto area, and you suddenly start thinking, oh no, I'm leaving central Porto, what's going to be here? I'm going to live in a rural area or industrial area. And once you enter Matosinhos, the area where Literal Living is, it's beautiful. It has a coastal feel to it, but there's a lot of companies moving there because it's so affordable. So this is it's a refurb of an old canning factory. They've kept a few of the elements. If you look at the CGI at the top right there, the left-hand side is what they've kept from the canning factory. And there's a few other features, like a few chimneys here and there that they've kept from the canning factory just to give it some character. And it's literally a 10-minute walk away from that beachside there, which is one of the best surfing spots in Porto. It has great restaurants on the beach, some bars, and it's, again, out of the city centre, something for you, Donna, out of the city centre, out of the hustle and bustle, but within a 10-minute drive of downtown Porto, close to the 10 minutes to the airport. And there's a lot of, BNP Paribas have moved their new offices about, I think it's 10 minutes away into the Matosinhos area, because the Matosinhos area is actually quite big. So there's a lot of business moving that way. A lot of startups are moving to Matosinhos. So a lot of new talent, young talent, all living there now. And who wouldn't want to live 10 minutes walk from the seaside and 10-minute drive to the city centre? And I think, as Grant said, a great thing about this project is really the developer. Lucas are very, very reputable developer in Portugal. They've done a lot of schemes. If you walk around both Lisbon and Porto and other parts of Portugal, you just see their buildings everywhere. They've done everything from residential, industrial, they've done schools, sporting facilities, everything. And they really always deliver just a great product. So we are super fortunate to be working with them, especially since the domestic market in Portugal is so active. And it really is, I think, I shouldn't be biased, but one of my favorite projects that I've seen. I think it really is going to be something special once it's completed in 2 years' time.
Yeah. And as I understand, the quality of the developer meant that it was quite a low-level marketing campaign that they could do. As a result, they just sold on reputation, basically.
Yes. So what they did is we had been in discussions with them for underwriting a couple of units for 18 to 20 units for about a year, and they said to us, listen, we have these procedures in place where when we launch a new development, we first offer it to our employees internally, and then we offer it to our employees' families, and then we offer it, through our database of people who have already bought with us, so our existing clientele. And they did exactly the same thing with this development, and they sold all of the other apartments just through those channels, except our 18 apartments. They've used no local agents, no distribution, nothing. And that again, as I was saying earlier with Bella Vista, the developers sold his units locally on the local market. I mean, they, you know, price point, type of product, location, everything then stacks up if you're getting the locals buying into a scheme.
Yeah. And I think we've got a little bit of a discount to market. Is that correct?
Yeah. So how they normally work when they do these launches, they'll have a first price when they go internally to employers and employees' families, and then, you know, stage 2 they'll put maybe a 5% increase on when they go to their existing clients, because that, you know, it's over a couple of months. It's not all at the same time, and they do believe that there has been this increase, this capital increase.
Yeah.
They were meant to put another sort of couple of percent on, but then COVID hit. They took the business decision that they weren't going to increase any prices, but they believe that there's going to be between 10 to 15% price growth in the scheme just while it's under construction. Yeah. Which is obviously always positive for our clients.
Absolutely, yeah. And this one obviously completes in around about 18 months' time, so it allows clients more staggered payments, which is great. And, you know, you're buying a 1-bedroom apartment from sort of 250,000 euros. Again, when you think it's sort of 10 minutes from the centre of Porto, with a great metro system and all the sort of tech startups, etc., it'd be perfect for sort of young professionals working in the centre of Porto. Almost makes me think it's almost like if you was living in Brighton in the UK and you're sort of 10 minutes from London. You know, you've got that great beach and everything else, and all the bars and restaurants, and then working in the centre there.
Yeah, I mean, you're easy accessible every day to the city centre, to offices, but then you get to come home to something 10 minutes from the beach.
Yeah, yeah. Donna, I could see you.
There's a lot to be said.
I can see you with your surfboard on that beach.
No, I can't surf. But I love the beach. It's my favourite thing to do. But I will say there's a lot to be said about people in the domestic market buying up property. And we see this a lot in the UK where projects are, you know, are offered, but they normally might be to the international buyer. When there's a project and they are actually buying in the local area, I think there's a lot to be said for that.
Yeah, I think the point, you make a very good point, and I think the fact is there's a lot of domestic buying, and it was really tough for us to get this unit, and that's what we want to see. We want to see a lot of local buying, because obviously that's what's going to basically spur the capital appreciation in that market. You know, affordability is good. There's a lot of wealth creation going on. A lot of tech companies, we know tech companies pay good salaries, and you know, property prices are good value, because it's only been the last few years since financial crisis that the market's picking up again.
I mean, so Porto's grown and had a lot of price growth, and people often see the figures, you know, 30% or whatever it may be, and are a bit shocked. But you got to remember, 2013, I think Porto had negative house price growth. So not only is it coming from a much lower base, but it's also coming from a few years of negative growth.
Yeah, absolutely. And obviously one of the affordability drivers is low mortgage rates. Donna, and that sort of leads nicely into yourself for the next slide, actually, where we're going to just almost do a sort of a interest rate overview for this one. So yeah, perhaps you just want to sort of talk through some of these figures and you know, some of the sort of salient details, Donna.
So just looking at a sort of an average price unit in this development, you're looking at approximately 235,900. Okay, so with your loan at 65% loan to value over a 20-year period, and I'm not going to read it out, you guys can see that themselves, but if you're looking at interest rates 10-year fixed of around that 1%, I mentioned 1.1 earlier, then you can see here your mortgage payments around £700 a month. So with an expected rent of just over €1,000, then you can see the return there is unbelievable. If you were looking to take a finance, there is certain charges obviously for taking that. So what I would say, there is usually the loan amount, we would charge 0.75 of the loan amount, or 1,500 depending on which is the higher, and we don't charge that all up front, we charge it in stages. So and it's the same for the residential, it is for the buy-to-let. So yeah, those phenomenal rates there. I don't think I've seen any market with rates as low as that.
Yeah, absolutely. I've never seen that in 15 years of being with IP Global, rates as low as that. So that is really fantastic, and a healthy cash flow month on month for the client.
Yeah.
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 Okay, great. Right. So I think we've pretty much come to the end, but obviously the most important part is, in many respects, the feedback, with the questions people are asking. And before we did this webinar, we were asking for our clients to send in their questions, and what we've done is picked out the top 9 questions here, the most regular recurring questions that people want answered. So Donna, I'm going to get you to sort of work through these. The first one is, I think we've probably partly answered, how can you help me open a bank account, and do I need to go to Portugal?
Okay, so just a little bit of content on this, because with Portugal, we tried to look at some workarounds, and that was opening digital bank accounts, like Bunk, for example, is a big one in Portugal. So the client could maybe go online, open a digital bank account, and they could have their mortgage payments come out of that on a monthly basis. The answer was no. So, so what we would do is, once the mortgage has been approved, then the client would know from outset whether they would be expected to go to Portugal to open that bank account to sit aside the mortgage. Okay. Sometimes they do ask, you know, can you go there? As I mentioned earlier, during COVID, we have had instances where they've done a video call with the client and they've felt comfortable with that. Don't forget as well, the client will have a lawyer in Portugal, so you can always appoint them as your power of attorney. So that may help out if you are really unable to get to Portugal, but we would advise you around that. But yes, you do need a Portugal bank account, and will you need to go to Portugal? Sometimes. That's the short answer.
Okay, and it's not necessarily a hardship either. Obviously, it's tough at the moment, but obviously we know there's a bit of flexibility there in terms of when you go. So, okay, second question, early repayment charges on mortgaging?
Absolutely, as with any market. So if you were looking at a variable rate, they tend to be, the early repayment charges tend to be lower than a fixed rate. You would be looking around about 0.5% of the loan amount for a variable rate as your early repayment charges.
Yeah.
Usually don't pay after the product's finished. You don't normally pay an early repayment charge after that product is finished. On a fixed rate, it works a little different. So if you were looking at a 15-year fixed rate, the first 10 years might be at 2% of the loan amount, and then for the next 5 years, it might drop right the way down to 0.5. So yes, there will be early repayment charges. It will depend on the type of product, and that is shown at outset. So the client would know that before they enter into any mortgage offering.
Okay, understood. Okay. Time taken for mortgage application. So how long would it take typically from beginning to end?
That's a really good question. And we have just gone through this whole pandemic. So depends on the lender. We have actually shifted some of the contacts that we've got with certain lenders. So one of the lenders that we worked with, we weren't really getting the answers that we wanted. So we actually changed branch, and now that branch is a little bit more proactive. So that has helped with the time that it's taken. But I would say from start to finish, and that when we say start, that means from receiving all of the client's documents, us checking it, and it leaving our desks and landing on the desk of the lender, I would say you should be looking at around 5 to 6 weeks.
Okay. So how would that typically compare to other markets, Donna?
It is slower. I mean, if you looked at Germany's quite quick, right? We can get everything done within sort of 3 weeks.
Yeah. If
I'm honest, in the UK at the moment, that is really struggling because of the stamp duty holidays. Yeah. We've seen a huge influx of applications. We've got banks that would normally take 4 days to assess a case. They're taking 17 days just to pick the application up. Yeah. So right now, if you were comparing Portugal to UK, not too much difference.
Yeah. Okay.
Because of the delays in the UK. If you're comparing Portugal to Germany, then you're about 3 weeks out.
Okay, so it's potentially in between Germany and UK. Yeah.
Absolutely.
Okay. Number 4, what would be a reason for rejecting an application? So why could the client's application be rejected, possibly?
Too much debt.
Okay.
What you say on the fact find, and when we start to look into bank statements, or if credit report, for example, if we saw there was adverse credit there, that would definitely get a decline.
Yeah.
So I would say as much information on the fact find, so that when we're presenting you to the bank, they know exactly who you are, and make sure that you have done, or your credit information, and there's no surprises there. One thing you do see with expats quite a lot is that they may have forgot about a bill that they'd left in the UK. Usually it would be a telephone bill. So just make sure that you know that what your credit scores are, and that you have got no adverse credit. But I would say debt to salary ratio and adverse credit would be the two main ones.
Right, okay. Number 5, when should I start the process? I understand typically for the UK, it's run about 5 months ahead of actual completion. Two-part question. So what would you say to that one, Donna?
I would say it's very similar to the UK. So I would start that around about the 5-month mark as well. And most of the lenders' mortgage offers will last 3 to 6 months anyway. So we would time that that sits in conjunction with the completion date. So yeah, I would say 5 months is a good period of time to start your mortgage application.
Okay, great. Number 6, I have already had a mortgage on another property in Hong Kong. Does this affect my mortgage application for a property in Portugal?
If that debt to salary ratio goes over that 50%, then absolutely yes. But you would know that when we're assessing the fact find.
Okay.
So we're not going to promise a client, yes, you could get a mortgage, if we don't feel that they would be able to, if that debt was too high.
Right, okay. Number 7, what is the typical loan term? And I suppose if I was to add something to that, at what age would the mortgage need to end?
75.
Age, perhaps 75. Okay.
Yeah, and that's so all mortgages are taken age next birthday and age at the end of the term. So bear that in mind.
Okay, and how would that sort of compare to the length of term, sort of date of ending for, say, Germany and UK as well? Is it comparable?
I would say it's, again, very similar to the UK. They tend to give you the choice of a 20-year term from the outset, but they will do 25. I think 25 years is a real UK-driven term, and I believe that's purely driven by the old endowments, and people used to take the old endowments years ago, and that's why that 25-year came in. But I believe, well, you can do 25 years, but mostly when they send out the lending options, they normally do 20, and then it's up to us to go back and see if we can do 25 years, which they normally say yes to.
Yeah. Okay. Number 8, can you explain more on the loan to value and interest rate that a foreign buyer can apply for? So I know we've touched on rates and LTV, so maybe if you just want to sort of summarize in terms of sort of typical rates, LTVs there.
So as previously mentioned, and Stacey touched on, you do need to check the payment schedule for the project, but normally it would be up to 65% loan to value. Some banks will say 60, but it really does depend on that client and what they've got in the background. So I would say you should, if you're looking to buy a property in Portugal, 65% is your benchmark, and I would say you should really be looking at rates. And I always like to don't want to promise anything and then under deliver. So let's look at 1 to 1.3 on the interest rate is a good benchmark for a client.
Right.
And you can change your cash flows, right, to put those figures in.
Yeah.
So the client can see what their cash flow is going to look like with those type of rates.
Yeah. Okay, great. Final question, number 9. Is interest only mortgaging available? And if it is, would the loan to value be lower under interest only?
No and no. So no, it's repayment.
Right.
Repayment and again, that depends on the client's age, so we'd need to look at that for the client, but it is repayment mortgages, not interest only. And would the LTV be lower for interest only? No, because it is only repayment that can be offered.
And I think the point to make is, with the rate so low, you know, on repayment, the cash flow looks brilliant anyway. So it's not, that's not a loss. Right, okay, I think that's pretty much it for the presentation. That time has really whizzed by. You know, I think that's hopefully been a very informative overview of mortgaging, and obviously where we see opportunity to invest in Lisbon and Porto too. So Donna, thanks very much for joining.
Thank you.
Great to work with you on this presentation. And I think, you know, clearly you're offering a lot of good suggestions for mortgaging for our clients, and you know, there'll be many more introductions for you given your expertise. So thank you for joining today.
Thank you so much, and it's such a pleasure to be working with you. So yeah, no problem. And
definitely you should look at one of those 3 projects for your new home in Portugal. No question.
I think in Porto. I think Porto's kind of winning it. It was the beach. I was thinking, yeah, absolutely.
You can just jump on the train down to Lisbon then if you want to be in Lisbon.
You'll be happy in all of those, that's for sure. And Stacey, thanks again for joining. Obviously, you've brought all of these projects to IP Global, great locations. So, and clearly, you know, they're really good opportunities for our clients.
Yeah, thanks for having me.
You're welcome. Okay, so yeah, hopefully that's been, as I say, very informative for you all. If you've got any other questions for myself, for Stacey, for Donna, do drop them over. As I say, this is another webinar in our Portugal series. We'll be following up with other webinars in the weeks ahead. If there's anything we haven't covered today, do drop us a line. We'll be happy to answer your questions. And all that remains for us to say is, yep, hope you've enjoyed that. Have a great day, and we look forward to keeping in touch with you all. All the very best. Thank you. Bye-bye.
Bye.